what distribution has historically looked like, if and when that is. The part I like to reiterate is that we know that asset prices trend. So by looking for reversals in the market, it really defeats the entire purpose of what we're trying to do here in the first place, is participate in trends, and we know asset prices trend. So the large majority of the time that you see these sorts of patterns that appear to be distributive in nature are simply not that. They tend to be consolidations within the context of an ongoing uptrend. In bull markets, technology is a leader quite often, almost every time. Semiconductors as a leader within technology. So if we are in the middle of a bull market, then betting that this is a massive top in semiconductors, you're putting the probabilities very much against you. Now, could it be a top? Could that have been it, right? AI, semiconductors, bull market, blah, 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 and that was it? It's possible. And then we're in a bear market, we go into a bear market, a recession, the wars and everything, all the bad stuff that they promise you are going to happen actually do transpire. I just want to remind everybody that in the last 4 years, we have had 2 severe bear markets. We have had massive corrections, and the types of things that don't happen too often have happened a few times recently. So to bet on another one, again, the probability is not on your side. So maybe this is a top, maybe it's not a top in semiconductors. I don't know, but let's take a step back and let's remember what it is that we're talking about and what the implications of something like that would look like and act accordingly. Are there other indicators that would suggest that this is a massive top? If this is one of the few things, like these are the types of things that we think about and that we talk about internally.
I would say similar to what JC is saying, you have to be aware of it, right? Just because it's obvious doesn't mean you ignore it. And I think that's step one, is being aware of what that pattern looks like and understanding in the context of a bull market, the odds of that failing there and becoming an actual head and shoulders top are a lot slimmer. And I think the other thing you got to look at too is from a sector perspective, it's a lot harder than it is for an individual stock than it is from a sector perspective to have that topping formation. Because on a sector perspective, you have a lot more stocks underneath the hood than you do an individual stock basis. And I was actually reading one of the Allen and Shaw's book, rest in peace, behind me before we hopped on. And back then there wasn't all these indexes and all these ETFs that had all these stocks underneath the hood. It was individual stocks. And we know individual stocks on a whole go down over time, right? That's why the indexes look great, because they market cap weighted, momentum, blah, blah, blah. But that's another piece of the equation. When people are reading these things, they're typically just looking at YouTube. They're not reading the books and understanding the context of the pattern, like JC was mentioning. So kind of agree with JC. I would just hold the horses on the world ending.
On a secular basis, and I've said this on the show several times, I think it is way premature to start worrying about the commodification of semiconductors and the various technology pieces in the lower part of the tech stack at this point. We are at the beginning of what we've been calling the AI wave. What that is, without the buzzwords, is essentially a reformulation of how we do software and hardware for the last 70 years and redo it dramatically in the next 20 plus years to go from deterministic software to probabilistic software. Those are big words. But for this, we're going to need ungodly amounts of chips, components, networking. The world does not have enough. We are capacity constrained, not just for the 1 or 2 years. And I'm not just talking about NVIDIA. I'm just talking about the layer of things that are going to need to be built. Essentially, all the data center infrastructure, the cloud infrastructure in the world has to be rebuilt. That's all. The foundation is chips. Just like you couldn't have built Manhattan without Manhattan Island, we have nothing without chips. So from my perspective, these waves and charts, etc., are absolutely critical to understand in the short term. And nothing said here is stock advice. But the amount of demand, the secular demand for chips of all types, GPUs, networking chips, all the components that go into making these superclusters. The next shortage point I'm going to highlight is memory. We're going to need extraordinary amounts of memory. The biggest change in the Apple phones, Apple 16 versus 15, is that every base Apple phone from the 15 to the 15 Pro Max comes with 8 gigs of memory. You need lots of memory, and 8 gigs is just the beginning of the beginning there. So chips are a fundamental foundation, and it is not going away anytime. It's not going away in quarters. It's probably not going away in years. We are in a relative secular bull market for semiconductors and chips. That does not mean that there won't be volatility, that there won't be short-term supply demand things and macro things and micro things to worry about. Volatility will be there. This is not stock recommendation. But the demand picture that we have, we have been trained in semiconductors to think, oh, this is just commodity and volatility and price pressure and so on. We can't make enough of these things in the amounts that we need for years to come. NVIDIA is in the forefront. Everyone else is rushing very hard and working very hard to create the capacity, the types of memory, the components, the computers, the superclusters, the data centers, everything all up to the hardware layer of the stack. And so we've got a multiple set of freight trains coming at us on this front, on the demand side.
Can I ask one more thing? Because, this isn't my world. I like to see what the market is actually doing, but it doesn't change the fact that I'm really interested in all of this stuff, and I do like to learn about all these things. At what point is this chip situation like a picks and axes of AI, like many other themes and cycles that we've seen over the centuries, really, where, the producers of the picks and the axes and the gold rush, if you will, were the ones that made all the money, not the fools looking for gold. Can you talk about that element at all? Am I way off? Is there something there? Maybe a little bit of both?
No, you're right. Every tech wave going back centuries, and I haven't been around that long, just the last 30 years or so. Pickaxe and shovels are very critical. Again, gold is a good metaphor, gold mines and so on. Couple of differences here. What I'm describing here is that the pickaxe and shovels, we are going to need dozens of times, hundreds of times more than we have in previous technology waves. Why? Because we are fundamentally redoing all our devices, all our equipment, all our network. The chips that go in are very different. The GPUs, the neural processors, the components that connect the different types of components, the connectivity piece, they all need chips. There is just a massive amount of chips. So to your point, JC, yes, pickaxe and shovels is a good metaphor from a trading point of view, but it is not helpful in the way where we're going, where we literally are rebuilding the ecosystem. It's like saying, we've discovered this continent called America, but in about 200 years, there's going to be so much concrete and so much cement and so much steel to rebuild, to build all the skyscrapers and so on. And then China 20 years ago comes and looks at the US and says, we are going to basically expend and use and build more concrete and steel than America did in the entire 20th century. They did it from 2000 to 2005. We are at that scale of picks and axe. If you say China shovels and so on in terms of building the Shenzhen and the Shanghais, the cities that you see, go on YouTube. They have subway stations that make anything we have look like something from the third world. They have airports that make us look like we're 2 centuries behind. We are at that level of rebuilding the technology infrastructure. So the pickaxe shovel metaphor to me is feeling too weak, too transient where we are going. So that doesn't mean you just got to buy everything in semiconductors, but I'm saying we need to dial down the tendency to call for the trading volatility in terms of the up and down on the charts, and just say that as part of your portfolio, for you, for your kids, for your grandkids, just have a higher than normal allocation to the semiconductors, because this is the concrete, this is the steel, this is the glass that everything is going to be built on top. AI is not a monolithic thing. AI is just new types of software that basically is going to redo hundreds and thousands of applications. We're going to have, each one of us are going to have dozens of AIs working for us in about 3 or 4 or 5 years. That's going to need 10 times, 100 times the chips that are in the systems today in 2024. So when you look at the charts, it's not the demand constraint, it's the supply constraint, how long it's going to take to make these things, Taiwan Semiconductor, etc. And so, yes, the pickaxe shovel metaphor, I think, stays with us for at least 5, probably 10 years.